All right, we turn our attention to the surge in demand for Indian initial public offerings, IPOs. The latest IPO drawing $39 billion of bids shows the insatiable appetite among investors looking for first-day gains. Investor enthusiasm for listing in India was on full display in an IPO that was 60 times oversubscribed for the home loan division of the country's biggest shadow lender. On Wednesday, the final day of the sale, Bajaj Housing Finance received bids of around $39 billion. The company was seeking to earn 65.6 billion rupees, that's about $780 million, in the largest offering this year. To put that into context, the bids of about $39 billion, that's more than 1% of the country's GDP for the fiscal year that ended in March 2024. This demand is driven by institutional investors who outbid each other by more than 200 times the number of shares reserved for them. The retail sector had 7 times as many applicants compared to the offer. Last year, a comparable reaction came during the IPO of Tata Technologies. So far, this debut in India, it's generated $7.75 billion through listings. Based on Bloomberg data, that figure surpasses proceeds from the previous 2 years. The average first-day gain this year has been over 30%, and investors have been trying to cash in on that. Bajaj Housing aims to raise as much as 35.6 billion rupees via new shares, while founder Bajaj Finance offered up to 30 billion rupees of shares in the sale. On the 6th of September, anchor investors, including the government of Singapore, Goldman Sachs and JP Morgan India, subscribed to 251.14 million shares worth 17.6 billion rupees at 70 rupees each. Now, bigger sales are on the horizon. Hyundai Motor might potentially earn $3.5 billion from the sale of its Indian subsidiary in the next few months. And for more on this, we're now being joined by Mithali Nikor, who is an economist and founder of Nikor Associates. Mithali, good morning. Thank you so much for joining us. Now, Mithali, what's your take on the surge in demand for IPOs in India this year? Mithali, I believe there's a problem. Could you please unmute your...
Yeah, hi, good morning. So I was saying that, we should look at, can you hear me now?
Yes, I can hear you. Thank you.
Yeah. So I was saying that we should look at the linkage between the macroeconomic trends and the trends that we are seeing in the equity and debt markets, especially the equity markets, because the cues that are coming from the growing macroeconomic, data and from the growth that India is showing despite global trends, the fact that it's outperforming its peers in terms of GDP growth, the fact that it's outperforming its peers in terms of inflation management, both of these very key indicators are actually driving the growth for equity, and they're driving the growth for equity demand, the kind of equity demand that we're seeing because of the macroeconomic trend, because it is understood that the Indian consumer is much more resilient. The Indian consumer is looking for a varied basket of goods and services, and therefore the high demand for Indian driven, Indian owned IPOs in that sense.
All right. Now, with bigger initial share sales in India on the horizon, what's your outlook?
No, I do think that a lot more companies can now start looking at stock markets and start looking at, this equity model of raising finance for their companies. Till now, what we have seen is larger and larger companies are coming and, putting out IPOs, family-owned businesses coming and putting out IPOs. But I do feel that in the next 10 years or so, we'll start to see even mid-sized companies come in and have the confidence to actually list on relevant indices, not necessarily on a BSE, but on a mid-cap kind of Nifty index and say, can we raise some financing on the equity markets? Because that is globally one of the best ways for medium companies to also raise funding. And it won't just be limited to the large companies. I do expect medium companies in India to start raising financing on equity markets. And I also don't expect this to be limited to, very traditional sectors like tech. I mean, tech and finance are two sectors which raise much more financing on equity markets. But in the future, as the equity markets deepen, we'll start to see companies from more and more traditional sectors come and, raise financing.
All right. Well, Mitali, thank you so much for joining us on World Business Watch with your insights on this. Always a pleasure to have you.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.